Good morning, traders. Good morning, everyone. Welcome to this webinar. Today it's Tuesday, and the markets, they already start moving. So beside that, I hope everyone has a great day so far, wherever you are in the world. And for those who join us for first time, you are very welcome, guys. So let's start by just mentioning that everyone is aware that this content is for general information only, and it's not intended to provide trading or investment advice or personal recommendations. Here at Admirals, every Monday we upload the weekly fundamental site. So you can go to our website and have a look. If it's your first time here and you don't know where to find it, please kindly let me know on the chat box below. And of course, the mobile application, you can download it from the App Store or Google Play. Yesterday, I mentioned that I can share with you the updated checklist I put together and the strategies I use when I'm trading. So I will put it here. I think the link has some expired time. So please make sure, ladies and gentlemen, you download it and save it on your computer, because I set up expire. I repeat that again. Okay, so please make sure. I'll just put it as a pin message and make sure you just download it. So let's start. Again, I have some difficulties to share with you the Premium Analytic portal. Maybe it's my browser. The team is trying to fix it, but unfortunately today I won't be able to share Premium Analytics portal with you. So let's go straight to the charts. Let's start with the dollar index as usual. Yesterday we said that for the day we're gonna try to sell the dollar, and during the live it was an opportunity that I talked about. I don't know if you guys took it, but sometimes I think you expected from me to say we should take this trade. I will never say that, because as you understand, I'm not allowed to tell any personal recommendation or financial advice here. But when I do the analysis and I say aloud my process, how I trade, at some point I take these trades. Yeah. So if you think that these trades are in line with the way you like to trade, your personality, your trading system, and you want to take it with your own risk, absolutely, there is no problem at all. Here, I'm trying to educate you as much as possible and analyze the market so you understand on a daily basis how can you do it. Yes, reversal loose rules, of course. Hello, Mr. Dashhan. Hello, sir. Rumen, yes. Sanka, hello, good morning. So what do we expect today? Today we are trying to break below this support. Remember, yesterday I mentioned about the Bollinger Bands, that I use them as trend filters, and I don't necessarily buy when the price touches the lower band or sell when the price touches the upper band. However, there are many traders, they do that. It doesn't match with my trading style, so I don't do this. And today we want to see, ideally, we want to see some trend continuation in this price action here to the short side. And if we project, the next target can be these low points here. All right, these points here on the left can be used if the price stays below. We need two closes below this support to validate it. So we can see the price coming all the way here. And ideally, that's what we want to see. Otherwise, we will talk about ranging market until we're going to see a broke above the high for reversal. But for now, that's what we see in front of us. We go to the DAX 40, the German index, and the price closes finally above this resistance. However, for breakout traders, maybe that's a good way to play it. For me, ideally not. I would like to see the price moving away from this broken resistance and on the consequent bounces to act as support to initiate long trades. FTSE 100, we closed above this zone nicely. Now we are waiting, as we said, for the price to make its move to the downside. US 100 or NASDAQ, we had this bullish engulfing of the support here. We talked about that, but yesterday the market put this weak price action. I can say you can see how much of volume was included in the previous candle, and the yesterday's one was just very small with a rejection on the 20 moving average and on the 50 moving average. But if you guys consider to take this trade to the downside, remember that the market here has a strong support, and if it's going to come here, we don't know if it's going to aggressively break the level, or maybe it will never come here. Now, there are few strong levels of confluence around this area, but as I always told you, all the average, they have to confirm each other before we think to initiate some positions. Now, the US dollar, the dollar index, it's right on support. If we're going to see a push to the upside for the dollar index, then we can see more falling here on the indices. So this can be a good way to trade strength in the US dollar. However, for what I see here, I didn't see any reversal price action here, so I would prefer to see something confirming this hold around this support. Otherwise, I wouldn't put too much of effort on these indices now. Okay, let's move on the major currency pairs. Can you please tell us on an example? Can you please tell us an example of a 10,000 US dollar account with 500 leverage, how we choose the input volumes? All right, now, ladies and gentlemen, about this, let me simply just bear with me for a moment. So what can you do to find your trading size in all the accounts? You can add the Admirals mini terminal here, and you can simply use this. I think I have on YouTube one explanation of how to use this. Now, In regards to specific leverage, to do the calculations now, guys, really, we don't have time to do that because strictly at 9:59, 9:58, I have to finish this webinar because at 10 o'clock, there is someone else in Poland. We have these webinars as well, so I cannot delay other webinars. But the best way to use is bring up this calculator on your MT5 and simply put your stop loss. You need to put how much is your stop loss, how many pips, and then and then percentage of how much you want to risk or how much money you want to allocate in a trade, and then it will show you the volume, how many lots to use. Okay, if you still, after you do it, if you still have questions, please refer to the Telegram channel, guys, and write on the comment below the lives today. Put a comment below, and Florian, I will definitely answer that. Okay, but please try to use the calculator first, and if you struggle, please let me know. And for those who noticed the Telegram, please, you can type comments below. You can say if you take some trades, and we can have a nice communication via Telegram. All right. Use every day when you want to communicate with me, use the daily's live market post, and on the comment sections below, I can see your comments. So let's start with the pound against the US dollar. Yesterday, we said that there are many obstacles. Although we noticed US dollar weakness, we said that pound maybe not going to be the ideal to trade because it was just below the 200 moving average resistance and the 20 moving average resistance. So we said it's better maybe to find another currency pair that it doesn't have resistance on the way, or support if we are talking about USD CHF, USD CAD, and USD JPY. Now, there is still room for price to move after we break above, still price to move until this area of resistance, but we need the appropriate execution methodology. So on the 5-minute chart now, we do have this consolidation. The price broke below. We don't know if the market is going to continue to the downside. However, I will consider more buying opportunities in this market because of the dollar most likely weakness. But if the price, it will not create a new high here on the 5-minute chart, if it's going to just continue dropping down without making a higher high retest and higher low here, then most likely we're going to have some continuation to the downside. But from the overall big picture, it's not something I would like to trade the downward move. On the euro against the dollar, yesterday we said we can use this to buy. Now we are approaching at this area of resistance. We'll see what happens. A trade I took, and I don't know, did anyone take this trade yesterday? We had this live and we said that here we are approaching this area of support, but when we went down to the 5-minute chart, we identified this. Let me see if I can bring it up now. On the 5-minute chart, we were, I think we were we were here, and we marked this resistance trend line here. We had this moving average, we had this 20 moving average as well, the 50 moving average. We spot that this one here, it was in this downtrend, and we were somewhere here the time we were analyzing this market. Anyhow, if you were executing right here with a stop above these highs, if we just enter the market, our stop should be placed above the highest high here. So it was 3-to-1 trade. If you enter there at the break and the stop above here. Again, 3-2-1 trade. So I hope some people, they took it. And I repeat, I can't say here, guys, that yes, this is a trade we must trade. No, there is no such a thing. The only thing you will hear me saying is that a very good opportunity. We have to keep an eye on that, and if it applies our rules, why not? We're gonna execute right now today. And today, we false break this support. We will see what the price is going to do. For now, there is no trade to take on the daily chart. Australian dollar against the US dollar. Again, it's trying to make its way to the upside. The Kiwi against the dollar, the same. It's struggling around this resistance. US dollar against the Canadian dollar. I'm still in this trade from the daily chart, as I explained last time. In this area of broken, then 50% retracement, entry here, stop loss there. And before it touches the next support, if it's going to be a winning trade, it will be a 3-2-1 as well. I don't know if some of you took the trade. USD JPY, remember yesterday you asked me about this pair, and I said because we didn't have a clear lower low here and we had just kind of double bottom, I wouldn't want to sell aggressively from this point. I would like to see the price coming and retest this, go a bit deeper into this bearish candle, and I could enter here with a stop loss above this area, so to get filled as much as in better price could be possible. And I said if it stopped out, it stopped out. That's fine, but at least it increases the probabilities that if the trade it's going to come to do a triple bottom, at least to make 3-2-1 in this trade. So for today, I don't see anything here really. Aussie against the yen. It looks nice to me today because we have a lot of levels of confluence. First, we do have these lower highs and lower lows. The price came at this area of resistance, got rejected. We have the 50 moving average, 200 moving average, and this resistance protecting this, this price level. Now, further analysis here on the 4-hour chart, maybe it can help a bit if we see a double top, okay, before we take the trade. For now, I don't think so. I'm going to enter this trade short, to be honest. Yesterday, I make it very clear, guys, excuse me. I make it very clear about this Euro against JPY currency pair. They were two bearish pin bars here, but they were right sitting on a support zone. We don't sell the support. We only buy at support. And I hope none of you enter short in this trade. And that's something the market very often does. On support, a price action reversal indicates that, sorry, on support, the price action reversal indicates that this market can't be selling off, but it just misleading and reverses. Okay, so let's be patient. We don't need to take 100 trades every week. We can take 100 trades in 6 months or in a year. Okay, it depends on how many trades a week or a day someone takes. I'm keeping an eye on this pair, pound JPY. As I said yesterday, I draw the fib I would like to see the price retesting some higher prices, rejecting around the moving average, and we see what can happen. Let's analyze the pound against the Australian dollar. So this pair here, it just bounced from the support. We have inside, we have kind of triple inside candles. So we can see some continuation to the upside. However, if you take the checklist I share with you guys, then you can see if most of the parameters applies. For example, it's a ranging market, and you have to understand that it's a very low probability. Ranging markets gives low probability trading opportunities. So we do have a support here. Yes, we do. We can check if we have some divergence on an indicator, maybe that will help a lot. Can bullish divergence or positive divergence on support. Usually it's a good indicator. For divergence, I use MACD, moving average convergent divergence, or the MACD indicator, because it has that 9, 12, 26 parameters, and it's a kind of slow transition, and that's what I like, because on the RSI, a bullish divergence on support and no divergence on MACD on support is it's more probable that the market it's not going to just push to the upside. Okay, but a strong divergence on the MACD, it's more it gives more weight for the trade. Now, a way that if you still don't see anything from the checklist, from the strategies we apply, and you want to take the trade, you can simply use another methodology. You can go on the 4-hour chart. You can spot this double bottom, and you can wait for the price to confirm this double bottom, and either we enter right on the breakout, or we use fib retracement. We match it with a level of support, and we can initiate buy limit orders from here, stop loss wherever it has to go, maybe somewhere here or somewhere there, until we get our 3-to-1. If you are trading with 3-to-1, okay, I'm trading with 3-to-1. That's why I mentioned 3-to-1. So gold on resistance, yes, from October 2021 and May 2022, hopes for reversal. Let's check the gold. Look, for the gold markets, let's be consistent and plot our Bollinger Band. So for the gold market, and guys, from seasonal point of trading, I will tell you that gold performs a good bullishness around December, January, and February. All right. And I always have this as a guidance when I'm trading December, January, and February gold. I don't know how to explain, but to me, it looks more that this resistance here on the weekly chart, this resistance here can temporarily stop this move. Yes, can temporarily stop this move and bring it somewhere around this support. But I wouldn't put too much weight on this resistance here, considering the fact there is a very strong resistance up there. So if the price movers, if the market movers, they want to get filled in much greater price for long term, I believe they're going to choose this level of resistance to short for long term instead of this level of resistance. Again, in trading, anything can happen, right? And you can do market analysis from so many different angles. The way I see the market, combining long term and near-term analysis, I see that the weekly chart, it's at the, I will call it soft level of resistance. That, of course, temporarily can push prices to the downside. But from here, we do have a trend line. Price, it's bouncing nicely above this 20 moving average. For moving average traders, this is what we call the golden cross, when the 50 moving average crosses above the 200 moving average. So it's a golden cross, and usually investors, they take it as a very bullish signal. Anyway, we know that moving averages are very lagging indicators, are not leading indicators. That's why we don't use them themselves. We only use them as trend filters. And here, you will never hear me saying that because of the moving average, we're going to initiate the position. No, with the moving average will only be used to filter some trending markets. Okay. If you are confusing with moving averages, you need more explanation, you can let me know. I can do that for you. If it's hard for you to use the Bollinger Bands, by all means, you don't need to use it. But because there are many traders here that they trade differently to each other, and I want to satisfy as much as possible everyone, I know that it's not that possible, but I'll try. I'll do my best. So I'm trying to use a different indicator from time to time, and all this stuff for everyone. So what can we expect from the gold market? Definitely we can expect some rejection around this area. But again, if the US dollar will just break below that support, then we definitely going to see the gold explode to the upside. Okay, and then the next level, it's going to be around 2000 mark. But for today, if you are considered to buy the gold right on the breakout, please understand that you need a good area to put your stop, because you don't want the market just to retrace normally somewhere here and take your stop and continue. And that's the reason we say we better wait for some retracements, and we can put our stop somewhere that it looks more safe for that time. Crude oil, we are still bearish in this. We do expect the market to continue falling. For my trading style now, I don't see any area to enter the market. The only trade I can see here, it's a bit more aggressive below this point. So a sell stop, a stop order here, and let's say my stop loss to be here and the profit target to be 321. But again, it's very low probability, because there is no room to make 321 until we retest this one. It wasn't a very nice price action to take from the top. You see this trade here was a very nice price action, an inside candle with a downtrend created a new low. So this one, if we were entered there, our stop there, we could make 321 easy, that before the market reaches some level of strong support. But here, because we do have a strong support, and I believe we have some divergence on the indicator, it wouldn't be the best idea. Okay, so yes, absolutely. So guys, I see the time. Unfortunately, I have to wrap up for now. It was a privilege and honor to host this webinar. Please have a great day ahead. Happy trading, and I look forward to see you tomorrow again at the same time. Thank you so much.